One of the things that the audience would complain about is that there are no ladies, there's no representation. I think the Insurance Institute of Kenya has scored a hat trick when it comes to gender inclusivity. So I must congratulate you on that. I don't know if it's because the one at the helm is a lady, but then we'll find out. So our task this afternoon is to focus you on the marketing side of things in view of the trends and insights for tomorrow's insurance markets, improving customer perception. Really, this should fit into the main theme, which main theme is about inside tomorrow's insurance. And Madam Director, you will forgive me, but I don't believe there is anything like tomorrow's insurance. It is here. Technology has disarmed us to the extent that what we think is a trend now, by evening, is no longer a trend. So I would want to believe that indeed, yes, we want to take a glimpse into tomorrow's insurance, but at the back of our mind, we should be aware that it is happening now. It is not even tomorrow. It's happening now as we speak. So a lot of the speakers, and I have got a lot of respect for all the speakers who came before us. The panel just before lunch was a fantastic panel. Tom and I think the lady did a wonderful, amazing job of focusing us on inside tomorrow's insurance. But I would want to say that definitely, and I agree with them, that technology is going to drive insurance of tomorrow. If you look at Alan Demers, the president of InsurTech, he says that the connected insurance industry of the future will look like nothing of what we see today. And it will come with enormous benefits, and these benefits will focus mainly and benefit the customer. But I also felt that sitting here since morning, there are certain aspects that probably I felt I would expand on or supplement on, but also share a bit of experiences. Now, I want to, and my panelists, I'll come to you. Please do not worry, all is well. Now, I want to address the issue of penetration. And I had here on the platform many of the members saying that, our penetration, Kenya is about 2.5%, if I'm not mistaken. Uganda is about 0.8%. My question is, are we using the right parameters to be able to gauge the contribution of insurance and the growth of insurance? In the world where I come from, we want to believe that using the penetration rate as a measure of the impact of insurance might not bring out the value of insurance. And what do I mean? If you look at Uganda, in 2005, our GWP premiums for the whole industry in 2005 were about $24 million. The penetration rate was at 0.5%. Last year, and $24 million is about 90 billion Uganda shillings, so you can do the math. Last year, we wrote about $378 million. The penetration rate moved to about 0.8%. So is insurance growing or not growing? From 2005 to 2022, we've moved only 0.3 points. What we are trying to do in Uganda is to try and see how do we now change the story of the contribution of insurance. We are now coming up with what we are calling a total tax contribution study of the insurance industry. Because we want to measure and say, how much taxes do we pay as insurers? How many jobs are we creating? What sort of claims are we paying? If you look at our industry, which is a little smaller than yours, but they are the statistics that I have, every single day, we are paying about 540,000 US dollars in claims. In Ugandan shillings, that's about 2 billion. Every single day. But who knows that? We just went through COVID, and we all know the impact that insurance and the role the insurance players played in the times of COVID, especially medical insurance. But who knows that? So we need to look at the contribution of insurance beyond the penetration rate. So we need to unpack that number. Kenya needs to unpack the 2.4%. What is under the 2.4%? And I think for me, once we are able to communicate that, we are speaking about insurance of tomorrow. The value of insurance is coming to the table. The second thing that I want to talk about is the drive to automate and digitize the industry, which is a very, very important one. And I think from morning, one of the things that has come out clearly is insurance of tomorrow is going to be based on digital platforms. We're going to be in a space where we've digitized. But my worry is that as we digitize, I don't think we've understood and fully unpacked the risks around digitization. But also, how are we digitizing? For the insurance industry, we seem to be digitizing our internal processes. The underwriting processes, the way we relate with the brokers, the way we relate with the reinsurers, we are automating those. Probably to pick a bit more premium and also to save a bit of costs. My thinking is that the other challenge we have is that digitization has focused on two areas. It has focused so much on onboarding the customer and also ensuring that the customer can be able to claim. But we all know as insurers, none of us is fully ready to empower the customer to lodge a claim through a digital platform, and it's fully paid. We are not yet ready. We may want to, but we are not ready. What we are forgetting are the processes in between. Once the customer has been onboarded through the traditional ways, insurance of tomorrow will require that we are able to automate the process in between onboarding and claims, so that the customer, we can create more touch points for the customer. More points where the customer can engage with insurance. It doesn't have to be only on onboarding and claims. If we can focus on that, and I think the banks have done it very well. They have empowered us through different applications. I think, if I may, I might be wrong, but at least personally, the time I've been here since 8 o'clock, I don't know how many times I've checked on my bank balance. I think over 10 times. Every single time I do a Visa transaction, I run to the app and check my balance. Those are all points of engaging with me as the customer. In fact, if you notice, for many of these points of engagement, they create customers who are entitled, and that is now the downside. Are we ready for unentitled customers in the insurance industry? Look at WhatsApp. Recently, there were challenges. I think it was sometime, a couple of months back. WhatsApp was off. We could not send messages, we could not receive messages. In my country, Uganda, everything almost came to a standstill. But if you ask people how much they pay for WhatsApp, no one will tell you how much they pay. But at the end of that day, they feel that WhatsApp owes them. It must be on 24/7. So are we ready as the insurance industry for the insurance of tomorrow? As we automate, do we understand the expectations required and what kind of customer we are creating? Because at the end of that day, the moment you do not automate right, the moment you don't understand that the customer is going to have expectations, please wait to automate, because you may be doing insurance a disservice. We must be ready. The other thing that I wanted to talk about also is data analytics. And I'm trying to unpack this. How many times How many times and how are we analyzing data as insurers? Today, do we know that there is what they call parametrics insurance? Do we know that through parametrics insurance, there are indices that are created on which claims are based? Do you know that under parametrics insurance, claims are being paid before they even occur? For as long as the results are showing that there's a likelihood of claim or a claim arising, it triggers a payment. Are we ready for all these things? Insurance of tomorrow requires three things. It must be flexible and easy to understand. The insurance of tomorrow adapts to the customer. It is easy to understand, transparent, and it can be subscribed to in minutes, with coverage ranging from a few hours to many years, and cancellations as easy as ending an online subscription. That is insurance of tomorrow. Paperless and instant. We must say goodbye to papers. Customers must receive their contracts instantly, online. Claims are handled online and digitally, and make subscription and claims processing significantly faster. One of the things that I want to emphasize, the purpose of insurance is to pay claims, is to settle claims. That is our ultimate purpose. Every single thing that we do, whether it is automation, whether it is data analytics, the focus must be on how easy it is for the customer to claim. That is the insurance of tomorrow. Basically, we must give customers a better claims experience. And of course, I've already been able to highlight the sub-theme, which is trends and insights for tomorrow's insurance markets, improving customer perception. And of course, my panelists have already been introduced. I don't want to go into the details of their profiles in the interest of time, but they're going to be able to share experiences in terms of how marketing fits into the insurance of tomorrow. They will talk about legislation and regulation. They will amplify the aspects of technology. They will also amplify the issue of value creation. Because value creation is the most important thing. Last night, we were seated at dinner with the director. Our expectation was that dinner would come with coffee. We were informed that coffee is only complimentary during lunchtime. But the waiter was very humble to let us know the options that were available that then came with dinner. Amongst the many, which included water, he also mentioned a detox. Now, mentioning a detox for the director was very exciting news. Very exciting, because she wanted to detox after eating and having such a pleasant dinner. So she then inquired, okay, tell me more about this detox. We were all very attentive. The gentleman said, it is hot water, a little cucumber, and some lemon. You can imagine how our expectations were deflated. Because then at the end of the day, we realized that there was no value. It's something that we could do ourselves. So my experts here are going to unpack that value that insurance creates, and also how we communicate with customers, among others. So join me on this journey as I go into the different questions. Our panel, unlike the two earlier panels where there were presentations, are based on an interaction where I will be engaging with my panelists, and they will be sharing the experience in as far as insurance of tomorrow, and also the trends and insights for tomorrow's insurance markets, improving customer perceptions. And of course, I mentioned there are ladies here. I do not want to seem as if I'm the only one who should be engaging here, but I would want to give them an opportunity, a minute and a half for each one of them, just simply to unpack for us the sub-theme What trends, what insights, especially from the angle of marketing, do they see? And how do these fit within the insurance of tomorrow? And I will start with you, Genevieve, if you don't mind. Thank you. You're not on?
Hello? Perfect. Thank you very much. It's a big topic, a very, very big topic. I have the pleasure and the honor of working in a very specialist sector of insurance, non-life, credit, and political risk. So you have specialist areas, then you have specialist areas. I've been in the industry for circa 20 years, just over 20 years. And I have been exposed to the evolution of our market as we see it, but it's still very old-fashioned, very, very old-fashioned. We have data requests, which a number of our brokers still find difficult, let's be honest about it, which then results in submissions which are not quite right or take a lot of time to unpack in order to realize what the client needs. So when I think about trends, insight for tomorrow, we at ASR are actually building a platform, an end-to-end platform to address this issue, because we've tried training, whether we've tried training cedents, brokers, clients, and we are still facing those challenges. And I'm sure a fair number of you here will agree that it's frustrating when you send a submission and it comes back with more questions. So in terms of the trends, certainly digitization is the way to go for my area, because the request and the demand for quotes is ever increasing. The demand is there, the need is there, the client wishes to have that insurance is there, but because the system and the practices and the processes have not evolved to the same standard that the client requires, we do find that there are issues. So in terms of trends and insight, we need to move from where we are now to digitization. We've already started that. We've already started an end-to-end platform, and the ultimate goal is to have everything through a portal, through a system, which would mean that at the front end, the customer knows exactly what they are supposed to provide. And if you don't provide it, then you can't go to the next stage. We also are working on a claims module, because if we can underwrite, if we can automate underwriting, then we can automate claims to an extent. But let's not forget something very important. The downside to all of this is the personal relationship. Because whilst digitization is great, and that's what we're expecting and hoping for tomorrow, the purpose of such a conference, meeting people, discussing, relationship building, has a huge impact on the sort of business that I underwrite. And if we lose that personal relationship as a downside to digitization, I'm sorry to say that's something that's actually going to struggle, because there is a very, very big aspect of what we do, which is about the personal relationships that you build. So it's great, but let's not forget the downside to digitization, which will be conferences like this.
Okay, thank you very much, Genevieve. By the way, Genevieve is the head of political risk and trade credit at Africa Speciality Risks, and she has over 20 years of experience in this area. So I want to quickly move to my dear sister Gwen, unpack for us the sub-theme and how you see it fitting into the main theme, especially from the angle of marketing. Over to you, Gwen.
All right, thank you. So I think before I go into where marketing comes in, I want us to take a step back so that we then get to why marketing is important, even as we determine the customer of tomorrow, whether we are saying he's the customer of today or tomorrow, right? So I think if we begin with why business is created. Business is created with the objective of making a profit, and hopefully somewhere along the way, making sure that customers are satisfied. So businesses are set up to either sell a product or service in order to be able to make profit. So that's on the one hand, why the business exists. So then, what this business must do to be deemed successful is it must be able to convince a customer to choose their product or service. Because there's no customer sitting and waiting for you to present a product so that they buy it. They must have an inherent need to be able to then say, this is the product that I want. So where marketing comes in, as you know, is to trigger that need and to create awareness for the solution that you hold. So then to your question, Johan, how do we ensure that we generate demand or create a need for the customer of tomorrow, and what trends do we need to be aware of? I think there's a couple. One is that we must be able to become very good at coming up with products and services that are relevant for our customers. And as we do that, we also have to be awake. I like how you called it. We have to be awake that we are serving an entitled customer. Now, when we think futuristically, one of the trends we are seeing is ESG. So that you have customers who are saying, I want to buy my products from a company that is socially responsible, that is governed well, and that takes care of the environment. So are our products postured towards these kinds of trends? Secondly, for us as insurers, I think there's a lot of work and an opportunity around doing the heavy lifting on data and analytics with all the unstructured data that we have, and putting that data together to then say, how do we use that data to build very amazing customer experiences? Because what then that does is it allows the customer to choose us over the next guy, because the customer experience is delightful for that customer. And lastly, I think self-service, where we personalize as much as we can, again, on the back of good data and analytics, is important and will continue to evolve. So that I think what self-service looks like today is going to look very different from the way it will look tomorrow. But I think those are some of the trends that we need to be cognizant of.
Thank you very much, Gwen. Gwen is the Chief Executive Officer of Prudential. She has over 15 years combined experience in banking and insurance. Before I bring in Angela, I would want to ask my audience that if you have a question, you note it down. We'll give you an opportunity at the end of the session, and we'll be engaging with you. Definitely, the marketing aspect is an important one, because at the end of the day, the sales must come in. The GWP I've been talking about must come through marketing and sales. So Angela, I want to bring you in now. What I have noticed about the Kenyan market is that the banks have become more aggressive. They are now entering the space of insurance as a growth area. And Angela is currently the Managing Director and Principal Officer at Equity Life Assurance Kenya. She's also the Group Director for Insurance at Equity Group. Angela, unpack for us the sub-theme and how it fits into the main theme, which is insurance of tomorrow.
All right, thank you very much. And I just want to correct the view that banks are entering insurance. I don't work for a bank. And Equity Group is an integrated financial services group, of which the insurance group is one of many entities. So just to rephrase that, the bank is not going into insurance, but Equity Group that has banking, technology, insurance, and a foundation is now venturing into insurance. Now, I thank you for the opportunity for this conversation, because you've asked about the customer of tomorrow, and I would want to say that the problem we're trying to solve with marketing, in my view, is a very age-old problem. As you well know, and everyone here knows, that insurance is one of those solutions that's not seen, neither is it heard, and it is a contract based on a promise, where a customer, for exchange of a premium, believes that should a risk event occur, then they should have the peace of mind that the insurer will come through. Now, in our view, that need has not changed, but the customer has changed in terms of how they would want to consume a service. They're more digitally savvy. They want to be able to consume products and services from wherever they are. But the problem that we're trying to solve is still the same, and in my view, it's still a problem of trust. where as long as a customer exchanging a premium doesn't have peace of mind that when a risk event occurs, the insurer will pay, we can market as much as we want to market. But if we're not believable as an industry, then we'll spend a lot of money focusing on pushing a product as opposed to creating a demand. So looking at the challenge that we're trying to solve, in my view, it is an age-old challenge, but for a fast-evolving consumer. And to move the piece along, it's more an issue of how credible can we be for our policyholders, but at the same time, how relevant will we be in terms of how and when they want to consume insurance. I wanted to take you back a little bit, Chair, when you talked about insurance penetration. And you challenged us and said, insurance penetration is quite low and perhaps we should change the formula of how we calculate it to reflect the true effort of the industry. Now, being a panelist, I have a bit of a different view. And I would want to believe that insurance penetration is quite high. In my view, insurance penetration is above of 80%. The reason I say that is because today, the people providing insurance to the community and businesses is actually the people sitting in this room. Through their WhatsApp groups, you're an insurance company, you're my competitor. And so the question is not, do people know the value of insurance or not? Because they're doing it through alternative forms. The challenge is, how can we get customers to trust the formal insurance system, knowing that you don't have to have a huge bank balance to support a family member with a medical claim? Why can't you trust an insurer with a strong balance sheet to carry that risk for you for a small premium? And so again, in my view, and as I said, I think a little bit differently. I admit I come from a brand where we say Mimi ni member, so a lot of our thinking is focused on the customer. And the biggest task really is, how will I get my customer not to trust their bank balance, their balance sheet, their WhatsApp group, their family group, because that is who is currently insuring the community today. How will I convince them to give me that premium and trust, going back to the old age problem, that whenever it is that they need to come to me, they'll do that. So coming back, Chair, my view is that marketing for us in the insurance industry is more about packaging trust, becoming more believable to our customers, but also about being nimble enough for them to consume insurance solutions as and when they want, from the comfort of their homes, as they undertake business, and as you said, pay as you go, pay as you drive, because the customer of today is all about convenience.
Thank you very much. I think, ladies and gentlemen, what is coming out clearly, and I think Genevieve mentioned, we are old-fashioned. If we are old-fashioned, do we fit into the insurance of tomorrow? I think what Angela has mentioned is that we seem not to be believable and credible. If we are not believable and credible, there are trust issues. Do we fit in the insurance of tomorrow? I think Gwen here mentioned the aspect of ESG, data analytics, but also the entitled customer. Are we ready to deal with the entitled customer? And again, as I come to you, Gwen, to just discuss a little bit about this issue of trust and perception, in all honesty. I think we've belabored to talk about the aspect of trust. The insurance industry seems not to be trusted. But how can insurance practitioners develop trust? How can we, as marketers, support in ensuring that we increase penetration and the perception? Remember, the perception not believable. How do we support the industry as marketers to change this? Over to you, Gwen.
Thank you, Johan. So I think the question of trust is a big question. And so even as I answer it, I will only just touch on some elements which I think should fall into our lists of things to do. So I think right at the heart of building trust, we must put the customer at the center and ask ourselves, how do we become good at meeting customer needs? Now, when we unpack what those customer needs, it's said that customer needs fall under three groups. There's a functional needs, which is I need to be able to buy this product because it serves a certain purpose for me. Social needs is this product or service that I'm consuming makes me, when I'm associated with using it, I feel good about it. And emotional needs, when I purchase this product, it makes me feel a certain way. Now, I think some of the opportunities that we have here as insurance practitioners is to ask ourselves, how much time are we spending articulating what needs we are actually trying to serve? So that if we say, for instance, that somebody has the need to be able to transport their family to school every day, to go to the office, to drive to church, etc., so then their functional need is a car, because they don't want to use public transport. It just makes sense for them to be able to combine all these needs around logistics and transportation into the need for a car. So then as insurers, we've got to ask ourselves, if that's the functional need, how then do we speak to that need? And an example is to say to that customer, to articulate for that customer what the risk of not having that car would be, what the risk of losing that car would be, what the risk of being in an accident with that car would be, so that when we then articulate the need for that particular service or product, it's so clear in terms of everything else that should follow. The next question then becomes, if that's the need we've articulated in our boardroom, is that how our agent communicates it on the ground? And if there's a disconnect, is there an opportunity that we're building mistrust? I think so. I think that the opportunity to articulate what needs we're serving, and therefore ensuring that across the value chain, everybody understands we are serving this need, and therefore the scripting for those solutions supports that, is an opportunity that we can utilize to ensure that we are building trust. So that then marketing becomes a demand generator, but the language and the communication to support that is succinct, it's clear, and it supports the need of the customer. It does not support the need of the insurer to sell an insurance product. The other opportunity I think we have is to personalize. Salesforce did a study where they said that 50% of customers ignore communication that's not personalized. And the same study also said that 79% of customers prefer personalized service messages as opposed to marketing messages. So there's an opportunity to foster relationships with customers, which can significantly increase the likelihood of them trusting us and wanting to be in a relationship with us. So there's a lot of opportunity from a marketing perspective for us to utilize not just the thinking around marketing, but the digitization tools that would support, for instance, product and service recommendations, customization of messages, personalized service and assistance, and also, and most importantly, that when we do customer feedback, digitization has made it so easy for us to do customer research today. So that I think when I was starting out my career in insurance, we used to have to go and hire a marketing firm to do surveys. But now we can actually use SurveyMonkey on the internet, which is really reasonably priced or free at a certain threshold. So once we get that feedback, what are we doing with it? Are we listening to the customer, and are we integrating that feedback into our customer journeys, into our products, etc., etc.? And lastly, as insurers, from a perception perspective, I know all of us have heard somebody say, we use too much jargon, right? So what are we doing about it? I want to give an example of the fact that we have an opportunity to communicate clearly, concisely, and consistently, and also to simplify. And there's an example I have from the office where, from a trust perspective, one of our colleagues passed away. And when somebody was checking to see how far are we to pay that claim, the claims officer said, "Oh, I'm waiting for his family to bring the ID document." Right? And all they could have done is gone to HR and opened his file. Right? So I think the opportunity for us to communicate to each other from a marketing perspective, to say marketing isn't only external, it involves us thinking of the entire customer experience with all the customer touch points and saying, how do we consolidate that so that we remove all the fat in the communication journey, make it lean, make it concise, and build trust everywhere along that journey.
Thank you so much, Gwen. But before I get to Angela, you've talked about articulating this message. But here I am, an insurance agent. A customer has called me. They are ready to buy. You want me to articulate and end up prolonging that sale, yet it was going to determine whether my kid goes back to school or not. That's one thing. How do I articulate when there is a need, a personal need, and I need this sale to go through? But also, secondly, Uganda has over 40 million people. How do we personalize insurance? Yes, 50% are ignoring these messages. But how do I personalize to 40 million people? Gwen, please help me with those two issues.
So I think, number one, to your question, you have an urgent need now. I think the statistics, and I'm sure that this is not unique to where I work, is if our agents make that quick sale, the stickability of that sale is very low. And so then the opportunity and the onus is on us in this room to train our agents so that they become, yes, better closers, but they are using the right scripts. They are using the right information, because as long as we are selling to the right needs, then we can be able to ensure the stickability of those products. I have an example from my team where one of my best performing agents sells online. She sells end-to-end online, and she only sells pure life, whole of life products. She has never met 90% of her customers. She has 100% persistency, because she spends a long time doing the needs analysis and having the right conversations, so that even if, and I like your example, because for this particular person, they've gone from earning 7,000 shillings a month to 500,000 in 2 years. Now, are her children starving? No, they're not. It's taken her 2 years, but the quality of life she can afford is much better, but it's more sustainable because her persistency is so good. To your second question, if there are 40 million Ugandans, how do you personalize? I think through partnerships. Through partnerships that allow you access to rich data. Combine the rich data from those partnerships, such as the information we can get from telcos, for example, where we say there's cohorts of customers who behave in particular ways. And so when you pull out those cohorts, then you're able to say, Johan goes to Nairobi Hospital, Johan shops in Carrefour, Johan does, we build a profile around you and a cohort of customers that look like you. So that then we are then able to speak to you in a certain way, because clearly you behave a certain way. Because then if we do that, then we can also be able to build the artificial intelligence to be able to say the best time to sell Johan a product is at this point. And as we continue to get better at understanding you and your cohort, we become better at closing and serving your kind of cohort.
Absolutely. And this is, ladies and gentlemen, it's a conversation. Feel free to supplement, even from my panelists. If you want to supplement from the audience, feel free to supplement, interject. It's a conversation, basically. And Gwen, you've talked about issues of trust. And I want to bring in Angela. Angela, we see that government now is entering into the space of social welfare. We see an example of NHIF. I don't know if government is coming into this space because we've demonstrated that we are not trusted as an insurance industry. Do you see this impacting and affecting the industry going forward?
Well, thank you, Chair, for the loaded question, NHIF. I think, Chair, just going back a little bit, when you look at healthcare and provision of medical care, I mean, we all know it's part of the SDGs. And we also know that when you look at Vision 2030, it was one of the core elements that's required. Now, coming back, because we're using data to have this conversation, when Equity Bank did a study around default rates for group credit, the data showed that 40% of the defaults occurred because there was a health incident. And then it therefore meant that any borrower who did not have sufficient life cover would then have double jeopardy, because you would have illness, you would have a loan, and then you would have exposure on your assets that you use to back that loan. So we start off by saying that healthcare is relevant. Healthcare is a daily need, and healthcare is one of those solutions that's consumed by everybody, regardless of age, regardless of gender, regardless of stature. It is a social need, and it is a basic need for each and every one of us. From a government perspective, there are views that government should only participate in policy, and that to some extent, when you look at the new NHIF bill, government is attempting to enter the market and participate to some level as a practitioner. Without getting into criticism of the government's view, I think what I would say is that, yes, currently the industry, we are worried that with the changes that are coming up, it means the market share is going to be reduced. We're going to be competing for the same customers. The price might be reduced and our profitability will be impacted. But I would want to say that if you look at the size of the problem that we are trying to solve, which is medical care for an entire nation, right? I would beg to say that a government cannot solve medical care issues sustainably for a long time. And if you look at the entire medical value chain, it's not just about providing an insurance cover, because that's what we do. It's also about what are all the elements that go into medical provision. You have outpatient. Your outpatient will definitely have consultation fees. It will have optical, dental. It will have referral mechanism to a level 1 or level 2 or a specialist. You'd have even cases such as maternity. Currently, if you look at the available network that can service customers across, or individuals, Kenyans, or East Africans across, there is a very big gap between demand and supply. The demand is quite high, but the supply of quality and affordable healthcare is not yet within reach. And government, yes, even with policy, doesn't have sufficient funds to be able to layer. And in their chair is my view that that is where the opportunity is presented for private sector, because private sector has the capital. Private sector has innovation and tools and technology that government doesn't have. And again, just to give an example, I'm sure we've seen across, particularly Kenya now going to DRC, Equity Afya. Equity Afya is a franchise run by Equity Group Foundation, focusing on both quality and affordable healthcare, sitting now at 90 clinics in less than 5 years, targeting to get to 500 clinics by the end of next year. So what we are saying is, yes, government could push using regulation, but government doesn't have sufficient funds to do this sustainably and affordably. And in there lies the opportunity for private sector. I did hear earlier somebody say that private sector has deep pockets. Perhaps this is an opportunity for the deep-pocketed private sector players to get into that space and create value. So yes, a few concerns around how it has been done, because compulsion is not necessarily the way if you're creating value. But I would argue that if an opportunity has been created and we know that governments have a constraint, then therein lies an opportunity for private sector to do this and add value to the consumer.
So basically what you're saying is that while we feel that NHIF is coming into our space as medical underwriters, there are opportunities. I just want to spend maybe a minute or 30 seconds again with you to just point the medical underwriter to the medical service, the medical insurer of tomorrow in the presence of NHIF. What would that medical underwriter look like? What do you think they should look like in view of the social protection aspect, and now that government is coming into this space? What should we do? How do we tap into that opportunity as a medical underwriter? Yeah.
All right, thank you. But these are just proposals. I wouldn't say that I can solve the industry's problems, but it's just to share some thinking. Now, today, if you look at a medical insurer, a typical medical insurer today is providing a product. But that product is sitting in an ecosystem that has layered expenses. You'll find that, number one, cost of acquisition of a customer is quite high. We are not yet fully evolved into digital health, so you're definitely dependent on intermediaries who, of course, have costs. Second, if you look at outpatient, you'll find the ability for outpatient facilities, which typically would comprise 60 to 70% of costs, would not be able to provide quality and affordability. One of the things I can point out to very easily is the cost of the cost of pharmaceuticals. Now, 3 months ago, I'll give you just one example so that you can see the space. 3 months ago, one of our technical teams was doing a review around how can you make healthcare products affordable by ensuring that the cost of provision of the service is affordable. And pharmaceuticals was pointed out as one of the areas that needed to be investigated. Technical team went on site, we went to a factory, and we found that there is medication, I won't mention it, currently retailing at 20 shillings per tablet. When you go onto the factory floor end to end, it's 2 cents. 2 cents per tablet. So it therefore means that today a medical underwriter who is pricing a product based on the current ecosystem that has layered costs is likely to have a product that is expensive or out of reach. And I liked when Gwen talked about partnerships, because not many medical insurers can solve the pharma problem on their own. Not many medical insurers can solve franchise problems on their own. And so it would mean that for private sector to capitalize on the opportunity, there would need to be a strong collaboration along the value chain, so that by the time you're positioning a product in front of a customer, you're sure your pharma costs are, I've given you one example, typically can be 15% of what you're paying or lower than that. You can have cost and affordability, for instance, consultation averaging at 500 as opposed to 2,500. You could have, and I know that one of my customers is in the room, technically having costs of an outpatient visit moving from 8,000 to typically between 2,000 to 2,300 per visit. But it's not a problem that one insurer can solve on their own. And as I mentioned with Gwen's comment around partnership, it is possible for an industry to conquer an ecosystem and make it affordable, but we would have to agree that it is mutual interest, that we're working together to solve the value chain and ensure that then an affordable product can then face the customer.
Okay, thank you very much, Angela. And I want to quickly, I know the director is signaling that probably I'm running out of time, but we are trying to manage. And I want to go to Genevieve, in all honesty. What Angela seems to be implying is that as marketers now, we must have a holistic approach. We are now talking about the entire ecosystem. I'm a marketer. I want to face the customer. I want to make the next sale. I want to bring that premium in. I want you to tell us, how can insurance companies have a holistic approach for the entire marketing cycle? Genevieve.
I think most of the points I'm going to be made have already been touched on, but I'll bring out a few points which I think are critical to answer your question, Johan. The first one is plain English of the products we offer. Plain English. Gwen said earlier on about the jargons we all use. And in my line of business, we are so guilty of the jargon, and we forget that this is what we do day in and day out. But even in my line of business, when I look at my colleagues, and ASR has 9 different product lines, the jargon in one line of business does not translate to the same thing in another line of business. So I think I'll go back to say, first and foremost, when we're talking holistic, let's talk about uniformity in plain English across insurance, full stop. My second point would be on making the customers aware of the product they are buying. And let's be honest and blunt enough about the do's and don'ts and the pitfalls. And how do we do this? We give claim scenarios. Because at the end of the day, if the product the client takes does not pay out in the event of a claim, then the product is useless. Let's be honest about it. So giving them scenarios and the transparency and the plain English at the beginning, before they buy the product, to me, is critical. Once again, I will say, in my line of business, enough of that is not done. We deal with corporates. We don't deal with consumers at ASR because of the insurances that we provide. So we know that we have a level of sophistication already from the client who come to us, right? Because for a company to come to me and say, I've identified that I have a risk, I have a credit risk, they must already have a deep understanding of what is credit risk. They understand that they give a service or they give a product, and that customer has the inability, willingness to pay or not pay. They've done that assessment already. So we're not on the consumer level, but at the same time, I think even in my line of business where we're dealing with quite sophisticated companies, businesses, we still need to be aware that there is a level of understanding. If I was to say, hands up, how many of you know about the biggest pitfall in credit insurance? Would anybody be able to tell me? Fraud. Plain and simple fraud. And that is across all insurances, not just in trade credit political risk. So when I talk about scenarios of claims and making people aware, it's just giving them that bit of information which we as underwriters, we have. Why? Because we pay the claims. So we know when we look at our statistics, when we look at our data, we know what is the biggest cause of a claim. And I don't think we share that enough as insurance companies. My final point will be sort of looking at the environment of the consumer taking out the insurance and trying to think past. Sounds very crude, but the target is to get the premiums in order to meet budgets. But what exactly is pushing or driving that consumer? Where do they live? What is their circumstances? In my line of business, what country are they in? What are the geopolitical pressures? Which, once again, we're talking sophisticated customers in my line of business. So we're talking about, are they worried about government changes? Are they exporting to a different country? Are they worried about borders and what the political state is over there? Are they worried about the financial, the liquidity, the market risk? All of these aspects form the holistic approach that we need to look at and share that data, because we don't share that data enough. And just coming back to your point that you just made a second ago, Angela, on sort of the government's involvement or ability and how they can help. PPPs is essentially what you're talking about. I'm going to use a controversial example. NHS in England. As much as we complain, it does work. But what is the NHS model? It is PPPs. The government has identified a level of service, a level of requirement for the average citizen, but the government is not in the position to provide the quality of the service or the finances. So what do? The NHS consists primarily of PPPs, people with the expertise, with the experience, who can actually explain to the consumer, this is what you're getting, you need to do X, Y, Z in order to get it. And then the private market comes in along with the government targets and achievement. I know this is easier said than done because, governments in emerging markets and developed markets operate differently. But the fact that you have a government who will understand and therefore recognizes that I need to bring in somebody with the expertise who can look at the holistic view, the environmental space that the consumer is in, is very critical.
Okay. The holistic view, and I think, Genevieve, you've shared experience from the fact that you deal with companies, you deal with businesses. And I want to bring in Gwen quickly, because what you're sharing is that customers have pain points. From the business angle, I want Gwen to come in and share from the individual angle. What are the consumer pain points that we need to consider as we develop our products and reach out to the market? Do these individual customers and consumers have pain points? How do we understand them? How do we interpret them? How do we then involve those pain points as we are generating and developing new products. Over to you, Gwen.
Okay. Okay, so I think the number one data point we have about reasons why customers don't buy insurance products, I think FSD did a study and 70% of the customers said that the reason why they don't buy insurance products is because it's expensive. And so my number one point is around the high cost of insurance. We have longer value chains, we have inefficient processes, and obviously there's the issue around the macro environment and the current environment that we're operating in. But even as I say that, I'll give a caveat, and my caveat is that I always find it interesting that people will understand and appreciate that the price of unga will go up, but then they don't appreciate that the cost of insurance should go up, right? And so I think we have some work to do to be able to build the relevance, and this, I'm on to my next point. How do we ensure that our products are relevant, they are useful, and that customers believe that they need them? Because today, the products we have are rigid, broad product offerings, where we give customers, as an example, a home insurance product that covers your bed. Now, when thieves come, they never take our beds, do they? Unless, I don't know. I haven't seen thieves who rob you and then leave with your bed, right? But they leave with your laptops, your phones, etc., etc. So even as we design products, can we consider that there is a bigger opportunity in narrower product offerings that ensure that the things we cover are the ones that matter to the customer, even as we try to build on the penetration question? So we need to be able to be more flexible in the insurance offerings that we provide. My next one is on the time that we waste on tedious processes. Now, even though I've been in the insurance industry for a really long time, I think sometimes even for me, I get lost in the technical aspects, where the actuary will tell me the reason why we can't do this is because of these things that exist in a black box. The underwriter will tell me something else, and then the claims guy will say something else. So how do we simplify our processes? Because even I think we need to step away from the conversation on digitization, because digitization in and of itself is just a tool. It's like a screen. Think about your phone. The screen on top, there's all the stuff. The hard work has gone in the back end. So the way I see digitization is it's the flashy screen. But as long as our processes are tedious, they are long, they're not value adding, then it doesn't matter what digitization tools we use. Our customers will experience us in exactly the same ways. So there's an opportunity because customers expect to be served fast and quickly. And so we need to be able to make sure that our processes and our systems provide that kind of posture for the customer. There's intelligent automation that can be able to support that once we've sorted out our processes. And this, coupled with good data and analytics, will ensure that if our systems and our products are reading from the right places, we really do have a good stab of becoming more relevant, faster, speedier, more service-oriented, etc. And lastly, I think from a pain point perspective, there is a lack of sufficient communication, and some would call it misinformation. I've heard somebody put it quite nicely when they said that our industry is plagued with the fog of industry jargon and the maze of bureaucratic processes. And I think that's really the experience that we give our customers, that it's so complicated in there. The communication is so difficult. I want to give a final example. I can see we're being given a heads up on the time. That when we think about our customer pain points, we must marry that with the customer of today and the customer of tomorrow. And if our policy documents are so complex to understand, to interpret, whereas our kids and maybe our younger siblings are on TikTok, where you've got to be able to communicate a message in seconds. How will we communicate our products in seconds on TikTok to be relevant to that customer of tomorrow? I am guilty of hearing a customer complaining and asking them, but did you read the terms and conditions? The fact is they don't read the terms and conditions. So the onus is on us to be innovative around how we provide clear communication that is bite-sized, simple enough that it can be consumed, and that we still remain relevant.
Thank you very much. Can you imagine walking into an insurer's premises with a claim and they ask you whether you read the terms and conditions? It would be such a sad story. But also the other thing that you raise, we must be able to ensure the right assets for the customer, those that are relevant, really. And you talked about the bed. What happens if they run with a mattress? What do we do? I mean, how do we then manage to ensure that? But also the other issue that you're raising, I think there are risks that you are alluding to. How can underwriting, sales, and claims be speaking the different language? That is such a huge risk for the organizations. And I want to bring in Genevieve, because risks are imminent, in all honesty, in our organizations. What management solutions would you suggest to reduce this kind of risks and safeguard our organizations as insurers?
I think the first one is communication, because you just touched on a very relevant point within an insurance company. Sales, underwriting, and claims. And when they speak different languages, that's when a claim doesn't get paid at the end. So it is critical. And one of the things that I insist on within my existing team, I have business development, I have credit analysts, I have underwriters, and when we get to a claim, I want oversight of the claims. We have a claims manager, but I'm involved in claims in sort of knowing what the claims manager is looking at. And this sort of end-to-end seamless communication between these different units in an insurance company is key, because if the sales guy sold something else to what the underwriter underwrote, and the claims manager looks at it and goes, that's not what we underwrote, that's not our terms and conditions, so we're not paying the claim, then you have a significant breakdown in that organization. So I think it is very, very critical that, you know, as an underwriter, when I think about risk, it's very narrow, let's be honest about it. As the head of my team, when I think about risk, it's not just the underwriting aspect, which would be very easy because it would just be, okay, what am I underwriting? I'm underwriting somebody selling trucks to a different country, so I'm looking at the market risk, liquidity risk, credit risk, political risk. Okay, that's fine. But it's not just that. There's also the risk that my customer purchases the product, and let's be honest, insurance is not cheap in some areas. My line of business, insurance, is not cheap. Therefore, you have to appreciate that they're spending money at a certain level in order that if something happens, you are going to pay that claim. So knowing how and understanding how they assess their risk in conjunction to how you assess your risk, and making sure that your touch points are the same and they understand how you assess their risk is critical. What am I talking about? I look at market risk. Are they looking at market risk? So my understanding of market risk will be different from their understanding, but they need to understand, if I'm looking at liquidity risk, are they looking at liquidity risk? Do they understand that their customer has cash flow difficulties? I can see that from the financials. Can they see it? All they're thinking about is sales, sales, sales. I want to sell that truck. And I'm looking at their customer's balance sheet and I'm thinking, don't sell, don't sell, don't sell, because they won't pay you. Not from the financials. So understanding the areas of risk and how companies assess their risk, once again, I'll say in my line of business, is very important in what I do, and making sure that there are touch points so that when we talk about, you know, how are you assessing the risk? What do you actually understand as the risk for what you are doing? I need to understand how they're looking at it and vice versa. So it comes back to communication, not just from the underwriters, but also the sales team, the consumer, or the company that I'm selling to. If all of this, if there's a breakdown in this flow, the end result, we don't pay a claim. and then we've lost the customer, and then we've lost that trust. So going back to the issues of trust, if we don't pay a claim, the trust is gone. They will not come back. And if they come back, they'll be very critical and very bitter about the service we provide.
Okay. Now, Genevieve, do you think that maybe there's a bit of fear amongst the underwriters to empower the customer and give them as much information as possible? Because in my opinion, one of the ways we can be able to deal with these kind of things is to have an empowered customer. We can reduce this kind of risks. The customer will have knowledge, they will know how to claim, they will know where to go in case of an issue. Why do you think we as the underwriters seem to be a bit cagey when it comes to sharing information? Why don't we want to empower the customer?
Because historically, we've not done that. So historically, let's be honest, there was a them and an us, right? But the world has evolved. The world has changed significantly. Anything that I look at, you can actually go on Google, go on Investopedia. It will tell you what I do as an underwriter. It will tell you the risk that I do. So, you know, the traditional old mindset of what does an underwriter do, shrouded in mystery, what do I look at? We need to step away from that. We need to have that dialogue and that communication with our purchasers so that they understand. I'll give you a very good example. There's always been this clause in our wordings, and it's a confidentiality clause, and it basically says that you are not allowed to discuss the existence of a policy with your risk party. So the person purchasing the insurance cannot tell their risk party that they've purchased insurance on them. And there's logic behind that. The logic still is, if you tell them, it encourages them to act in a sort of, you know, if they know that you have insurance, then it's like, if I don't pay, that's fine. They have insurance, they can claim. And that's a real risk. But you need to weigh up with the benefits of if they know. So one of the more sophisticated users of our product are the banks. The banks understand, and therefore, when it comes to this particular clause, we actually waive that clause. And why? Because the banks need to tell their customers so that their customers understand why the banks need that insurance product. The banks need the insurance product so that they can give you the additional comfort and the ability to give you that loan. Because for them, for governance and Basel regulations, they need to have that insurance, and they need to have it at a certain rating. This is all stuff which has always been shrouded in secrecy because we don't share the information. Well, we haven't done till recently. So my point is, there has been this them and us, you know, how do we assess risk? What do I look at? And I think breaking down those barriers and making sure that the understanding is there so that whoever the risk party is, whoever's buying it, understands why you're looking at it. Of course, they'll challenge you on your pricing. But as an underwriter, if you're confident enough in how you are pricing and why you are pricing and the reasons, then there should be no reason why you can't share that.
Oh, so we must underwrite, we must share information because the information is readily available after all. So whether you hide it or not, the customer has the potential of getting this information. So be ready for the questions. We are better off sharing. I don't know if that is why we are now heavily regulated. And I want to bring in Angela. What we have seen over the last couple of years is that there is an increase in legislation in the insurance industry, in the insurance space. I don't know if it's a good thing or a bad thing. In my opinion, it's a bad thing because then we are bringing the regulator into the space of underwriting, a space that should be a preserve of underwriters. But because probably we're not doing it right, the regulator is coming in. Angela, how is legislation affecting marketing in this region? There are quite a number of laws and regulations. For everything, there are guidelines. For everything, there are notices issued. There's the Act. How are we being impacted as the marketers? Angela, your take on that.
Yeah, thanks, Chair. I think just going back, you are right that there's been an increase in the level of of, let me call it governance, around data protection and management. And it's not only affecting insurance companies, it's affecting any institution that is either a data controller or a data processor. So it goes all the way affecting, IT companies, it's affecting telcos, it's affecting any person who's handling personal information for a customer. And when you look at the regulation, it goes as far as to define even what that personal information is. It's very wide-arcing. Now, of course, if you look at the marketing side, on the insurance side, I think what's been happening a lot, and this is very evident when you look at the complaints that are published by IRA, that there's a lot coming out there around treating customers fairly, around disclosures made to customer, around use of their personal information, particularly when you have third-party providers to do extended marketing campaigns without the consent of the customer. It even affects businesses like Equity, where you have a core banking customer who has not permitted the insurance business to use their personal data in order to enable them get information about new products. But it's really stemming from, can we say, an exerted effort to protect this consumer. And I would want to believe that the intention is good. Because all of us here on a personal level would be very uncomfortable if your personal information became public, advertently or inadvertently. If information around, for instance, your financial statements became public, just to the people in this room, you would be uncomfortable. If your medical report from the last doctor's visit became public, it doesn't matter what you were doing there. If I even knew publicly what your BP reading was, you would be uncomfortable. So I think it's fair to say that individuals, particularly in an environment where we have a lot of digitalization and data is easily accessible, intentionally or not intentionally, and by the way, I'll challenge each of us. Actually, there's a lot of personal information we put out there, particularly when you use social media, so the Act doesn't really protect you from that. But the reality is, as individuals, we feel that we deserve that protection, and to some extent, there's been some level of unfair commercialization of our personal data, which is not for the benefit of the consumer, it's for the benefit of the insurer or the benefit management provider or the bank. So it's not being used to benefit the consumer. So first of all, I think the intention of the regulation is good, and largely we all appreciate why we wouldn't want personal information to be accessible without access or consent. Now the challenge is right now, and I'm so glad we've talked about data all through. We've talked about the importance of data at onboarding. We've talked about the importance of data on claims management. The reality is, without customer allowing you to have access, in my view, to what we call lifestyle data. Lifestyle data is how they consume their products, when and where. Are you an M-Pesa user or not? By the way, we recently saw a study that showed that high net worth individuals, such as those in this room, typically buy insurance products between 6 p.m. and 8 p.m. on Mondays. So without that information, I wouldn't know when to position it. And by the way, it even shows the difference between when we buy risk products, which typically is on Thursdays, and when we buy savings products, which typically is on Mondays. So ideally what would happen is, because the customer is so safeguarded, and remember, insurance is a grudge product, so they're not naturally going to tell you, yes, access my expenditure, access my movie ticket, etc. It then means that they miss out on the opportunity for us to customize our products around their lifestyle. You would want a situation where a customer who's taking travel insurance doesn't necessarily need to go and look for travel insurance. As you pay for your flights, in there's travel insurance. And I only knew that because you gave me access. And in fact, it would be so good because I plug it into your customer journey, whether you like to pay by card or by M-Pesa, we just embed it, it's one payment, and voila. So the impact on the marketing side is that we don't have enough information to move our products into what I think is daily relevance. And daily relevance is where your customer is consuming your product as part of their lifestyle. As they're walking, they have GPA. They don't have to buy GPA. I mean, who would buy a personal accident cover consciously? What am I saying about my risk ethic? But if I was walking around knowing, you know what, things could happen, even with God, let me just ensure that for every step I take, I have insurance cover, then it's plugged into the lifestyle. So I think on the marketing side, the impact of well-intended regulation is we now have a missed opportunity to customize our products into our customers' lifestyles, to also ensure that we can meet them at the point of need. And I'll give you an example. If, for instance, today you had in one ecosystem one customer, you'll find situations where, for instance, let me use, unfortunately, a terrible example, a death occurs. When a death occurs, ideally in an insurance ecosystem, we should be able to know that this is the same customer. We should not require the customer to bring documents to life insurance, bring documents to pension, bring documents to get the last expense on medical. But in our ecosystems, these are different people with different policies. And so because we don't have the data that can sense that, wait a minute, these are 15 policies, but this is one customer, and can automatically trigger a death event has occurred. And without the customer having to go through the harrowing experience of filling, they get one list of documents, which, by the way, I personally think all documents should be collected on onboarding. I don't think we should be asking you to prove who you married when you've died, because it becomes risky. Just tell me at the beginning of the contract, right? And so we miss an opportunity because the customer, in our view, is fragmented. What does that do? It creates friction, because then on a sad event, a loss event, they then have to keep interacting with more questions. Wouldn't it be so good if, as long as on any one policy we were notified there was a death event, then we would all respond, regardless of how many policies, and pay to the people who've been named within 72 hours. Then the customer experience would be good. But then it would mean that the customer has to allow me that if I have a life policy and a general policy and a health policy, that they can share information and know that I'm the same person. And if I don't trust my insurer, I will do that. So I can give you very many examples, but my biggest view is that the tragedy around data protection is that it has taken away a great opportunity for us to plug into a customer's lifestyle, one, but number two, to take away friction on pain points. And I believe that as we continue to, because I think all along we've been talking about improving trust, improving relevance, and I think once we win the customer over and they just give us a little bit of access, then we can really start to see things like AI coming into play. You know what they say, you're buying diapers. By the way, statistically, they say that diapers in a supermarket are always stationed next to beer, because men usually buy diapers at night. So that is data, right? That we know if a diaper is appearing at 8 p.m. and it's a guy buying, we sell him beer, but what do we also do? Sell him football tickets. And so now we're really customizing it, but without that data, it will just look like diapers, right? Absolutely. And it will just look like 8 p.m.
Absolutely. Thank you very much. When the price of Ugari can go up and it's acceptable because of daily relevance. That is Angela's point. And as I open up the debate, ladies and gentlemen, are our products relevant? Are there any questions? Are there any views? Are there any additional information that we can share on this very hot topic of marketing? Do we have any questions online? The questions can be directed to all panelists. They are the experts. I am just simply a chair. I'm here to moderate.
We don't have a question online. And we have at most 4 minutes to wind up. Okay. So I will be looking at questions that will be coming through. We have one hand there. Do we have any other so that we are able to have it planned for? We only have one. Okay. That's okay? That's okay. So I'm going to get to the one with your permission.
Please.
Okay.
Please.
Thank you. My question is, I think my name is Marucha Jonathan, Lesa Insurance Brokers. My question is to the panelists and also to the underwriters in the house. I think Angela has raised a very good question on the issue of claims, where you have clients filling in 10 claim forms. Are the underwriters in the house ready to be challenged effective immediately to collapse all all claim forms, where you have, Marucha has a WIBA with, say, Equity. Marucha has a group life with equity. But we have to still feel those 10 different claims. Are the underwriters in the house ready to collapse all those and give us just one unified claim form so that we can be able to challenge this insurance of tomorrow?
Thank you very much. I know in the morning we had a concept of the claims clearing house. Do you think this is something, Angela, that can be undertaken under that sort of arrangement? And I'm selecting you because the broker was very, very direct in terms of who had raised the point, and I'm sure you have the appropriate response. But any of the other panelists are free to supplement as we close.
Thank you, Chair. I actually am the worst person to ask because my answer is yes. Unfortunately, of course, I do know that different underwriters have different considerations based on how they've done policy design, but reality, majority of the policies are similar. So my view is whether it's through claims processing or whether it's through standard documents, my view is yes, that's one of the things that we could do to reduce customer friction and improve the customer experience.
Okay, very good. And as we close, just Genevieve, any parting shots from you? As we close. I know we are pressed for time.
Education and transparency. That's all I can say, because if we have enough education of our terms and conditions and transparency on what we do from underwriters, brokers, cedants, I think we can have a less frictious, is that the word, relationship in our industry.
Okay, Gwen, I want to come to you as we conclude your parting shots.
So my parting shot is that we have a great opportunity to spend time ensuring that we marry our understanding of which needs we exist to serve, communicating that across our entire organization, ensuring that everybody understands these are the needs we're here to serve, these are the customer segments that we're here to serve, and that we can serve them better than anybody else. If life was a party, then communication would be the music. I think how we communicate and how we get our customers to experience us lies in the communication that we put out across the value chain, so that there should be consistency between what the agent or broker tells a customer, what our service people are saying, what the product people are saying. Truly, truly, communication is at the heart of how we deliver service.
Okay, Angela, final comments.
Thank you, Chair. I think my final comment would be two things, really. I think the first is that we all know what needs to be done. I'm not sure if we've said anything too different from what everybody knows needs to be done. I think the question will be how much of what we've discussed will we take and actually execute, because it's one thing to discuss and ideate, it's another thing to execute. The second thing, Chair, as I close, is I will say this. Insurance actually commenced in 1800, and when you look at the history of insurance, it was actually intended to be a safety net. Yes, over the years, it's become more about profit and etc., but I would want to say that as an industry, we know we exist because of a purpose. And that purpose is to ensure that if something occurs, that our customers know they can rely on us. So I would want to say, in my view, that as long as we have purpose, profit will come. Thank you.
Thank you so much. A round of applause for my panelists. Our purpose as insurers is to settle claims. The record is 2 seconds. I don't know if we are ready to beat the 2 seconds by lemonade, but also the concept of daily relevance. How do we ensure that insurance is viewed as relevant in terms of the daily routine of our customers? Let's be transparent. Let's empower our customers. Life is a party. Communication is the music. Thank you, ladies and gentlemen. Over to you, Mr. MC.
I like the way they are mentioning music and the party and everything that comes with it, because that's what we are headed to immediately this evening. And we want to give a round of applause one more time for the panelists and the paper chair. Well done. You have done amazing. And your English categories are so good. People will think this conference is actually being carried out in Minnesota. So we want to appreciate your English is really good. I was following her through and I was impressed. Thank you. So at this juncture, I want to bring us to the great moment of appreciating our speakers as well as the paper chair. To start with, I will start with Gwen Kinisu, the CEO, Prudential Kenya. We wish to present a gift. And this gift will be given to you by Jonathan Marucha, the Treasurer, Association of Insurance Brokers of Kenya, and the CEO of Laser Insurance Brokers. Bwana Marucha, please have the gift. I request Gwen to please come over here, down here, so that we are able to present the gift to you by Bwana Treasurer AIBK, that is Jonathan. And you see, we chose the Treasurer. You never know, he can decide to do you a check also to appreciate. Thank you so much. We'll receive our big gift from us to you. Are the photographers? We're good. I was hoping they would be somewhere, but I'm sure they will have captured that moment profoundly and well. Thank you so much. Our big round of applause one more time for Gwen. Thank you. Thank you so much for that. Then I'm going to welcome the paper chair, Bwana Jonan Kisakye, all the way from the Pearl of Africa. Do you need to redo that photo? Yes, please. Gwen, if you don't mind, please come back. We want this to be in the memories, and then we will caption it nicely that we did this in Minnesota and brought it to Mombasa. Okay? So please, thank you for accepting to come back. We sincerely appreciate you. Our photographer was refilling the memory, being sure that we have had quality photos from this session. Thank you so much for understanding. Please smile again like you smiled before. That's amazing. You guys can actually copy-paste your smiles. Amazing. Thank you so much. We appreciate you. Thank you. Thank you so much. We're now going to have Mr.Jonan Kisakye, all the way from the Pearl of Africa. That is Uganda. And we want to present this to you. You said you cannot get to State House in the moment, but I was just predicting a good future for you. So we're going?
You're forgetting that I have a new name. The ladies call me Johan.
Johan.
I don't know why you're calling me Jonan. Who is that?
Johan. You're called Johan.
Johan. I thought
Johan. And Kisakye, is it correct?
Well, you ask the ladies.
Amazing, amazing. That is the good thing that comes with height. Tall, dark, and handsome. Now, we are going to have this presented to you. Just so you know we have good taste in Africa and in Kenya, in the IIK. We are going to present this gift through Roswanda. Look at that one that we are presenting the gift through. Roswanda is the Secretary General of the Organization of Eastern and Southern Africa Insurers, that is OSI. Roswanda presenting the gift to you. Johan, I got it right? Kisakye. All the way from the Pearl of Africa in Uganda. Please present our greetings and tell them this is Kenyan finesse, all the way from us to you, showing our love and support also for the industry, even as we grow together. Thank you for chairing the paper, and we wish you well, even as you head back to the Pearl of Africa, Uganda. Those people, those guys, Uganda. Okay, next we're going to have a gift for that hard name again, Genevieve. Genevieve is the head of political risk and trade credit underwriting in Africa Speciality Risk. And this will be presented to you by another amazing gentleman who dressed up for the occasion, not to miss a moment to give this gift to Genevieve. This is none other than Michael Omondi, the council member IIK. I told you he dressed up for it. You thought I was lying. He was preparing to just give this gift to you. This is how much seriously he took his assignment. Amazing. But Michael Omondi presenting this gift from us to you, just assuring you that we spared the very best for the very best. And indeed, we appreciate you in a special way. Great smiles, international smiles. Bwana Omondi, all the way from Nigeria through Kisumu, and now He also knows White House. Amazing. Now we are going to have our, good thing about you is that you had a chance to give a gift. And that is Angela. Angela presented a gift earlier. And the moment has come for her to receive the gift. So don't worry, whatever you do something, sometimes it will come back to you on the same day, in the same forum. Indeed, Angela, the Managing Director and Principal Officer, Equity Life Assurance Kenya, receiving a special gift from us to you through Milka Kenya. Milka Kenya is coming over to present. This is us appreciating you, CEO, Prudential. Pioneer. The names beginning with P sometimes confuse me. Okay, the CEO Pioneer presenting. A big round of applause for Milka as she comes to present. Milka has a very particular Kenyan smile. She can glow with nice dimples, From us to you, the IAK to you, presenting this gift, saying thank you so much, Angela, for your participation in the marketing panel paper. And we sincerely appreciate you in a very special way. Thank you also, Milka, for coming through for that moment. We sincerely appreciate you. Ladies and gentlemen, another round of applause for the paper chair and the team that has been able to handle that paper in a very amazing way. Thank you also for the online teams that have been with us. We sincerely appreciate you. Earlier on, I missed a chance to mention one more bronze sponsor who came through. Ladies and gentlemen, Jubilee Insurance were able to join us as the bronze sponsors, and because of that reason, we sincerely appreciate Jubilee Insurance for coming through, and the representation in this room, please take our regards to Jubilee and tell them we appreciate you in a very special way for being part of our bronze sponsors. I am going to also appreciate, as earlier promised, all the companies that have been able to send representation. I will just be mentioning one name so that we are able to cover them. There are over 50. That is starting with OSI, KenGen, Ketraco, Kenya Airways, Kenya Wildlife, NSSF, Nairobi Water, Bank Assurance, KCB, Standard Chartered, Equity, Casneb, Intra-Africa, Old Mutual, Geminia, Britam, Madison, Nascori, Grasavoyer, Jubilee, Liaison, Leza Insurance Brokers, Zamara, Aki, Heritage, KPA, Gunnery, Fidelity, Pioneer, Minet, Patches, Sedgwick, Waikari, AAR, Prudential, Miran Insurance Brokers, ICA, Capex Life, IRA, Zepri, Kenya Orient, Stanchart, Fast Assurance, AIG, Jubilee Allianz, ABSA, Instant Insurance Limited. These ones are coming all the way from Juba, South Sudan. We sincerely appreciate them all the way. They just came and their English is perfect. Then we have General Adjusters. We have Insurance Institute of East Africa, CIC, Ken India, and you guessed it right, IEBC. They are all here with us, indeed, supporting. A big round of applause for all these companies who have been able to send representation right here. In case I missed your company, do not worry, because we have another session to mention and give a round of applause for all those teams. Once again, Jubilee Insurance for coming through. We sincerely appreciate you as part of our bronze sponsors. Now, as we are headed into our next session, we are just going to flex our bodies nicely with our team building team that can now be invited into the room to take over. We will also be having registration. Before you leave this place, we'll be having registrations for those who will be participating in the golf tournament tomorrow. It is your moment. Just have a moment to participate, register, take those photos at the golf course and ask Mwalimu wa Maths, hapa ni wapi? Okay? So feel free to register, take very nice photos at the golf course. Just be there, understand the rules, and maybe you may make a network or two because I was told one of the things that will help me become an international MC is playing golf. I already have the body for a golf player. It has now the opportunity. This is yours also to be able to participate. Just be able to register with the ELAK Secretariat for the same. They will also be asking for your phone number, if you don't mind, so that we are able to incorporate you in a WhatsApp group just to follow up on these deliberations. Some presentations will come on your email and other conversation on the WhatsApp. And we will also share a link to the group, to the Google Drive, whereby you'll access the photos of this session, just to ensure that you have WhatsApp status to tell them we went very far in Mombasa and you are able to attend. And for those who will want evidence that you attended, then the photos are available just to ensure your company can sponsor you to Mauritius and South Africa for the next conference. Okay? Now, having spoken much, I want to invite the team building panel. Please come over. Please welcome. We're going to invite them. They're going to have a quick activity with us before we head for tea. And just a polite reminder is that we have our dinner in the evening beginning 7:30 Kenyan time to 11 o'clock. We have wonderful meals prepared for you. We have a wonderful band live there singing songs. In case you wanted someone to sing for you, Malaika, nakupenda malaika, nami nifanyeje. They will be there to sing. And they mention your name there at Malaika. Njeri, wasumbua roho yangu. So just watch out and be there for that session, even as we prepare for that. Remember, the theme is all white with a touch of African, even as we prepare. For now, I hand over to this team. My name is Okari. See you in the subsequent activities. Over to you. Karibuni.
Thank you. Wapi makofi yake tafadhali? Makofi mazuri. When I grow up, of course. Now, ladies and gentlemen, I will request everyone to be up on their feet. This is Eagle's Management Consultants. Even before we start, we like to recognize one individual, Stella Gatogo. Is she here? Stella? Okay. Umesalimiwa na mzee. So we are assured uko conference. Makofi yake tafadhali. All right, tell your neighbor, if you're insured, you are assured. At least I've seen one company that is has provided insurance for my motor vehicle, so it exists. Ndio? I'm now confident. Sasa, look at your neighbor to your left, to your right. Tell them you're looking amazing. Amu mwambie ukweli tu. Tell them you're looking amazing. Look at another neighbor behind you, in front of you. Give them a high five. Tell them you're looking amazing as well. So my name is Rex Zakayo, and I have my friend here, Hassan. And we're just going to jig a bit. All work and no play. Make Jack a dull boy. Over to you.
Tunashika kichwa, sema ma. Hii kichwa inasema ma.
Both hands.
Alafu sema mato. Mato. Hapa ni mato. Alafu tumbo ni mato. Mato. Alafu mato hii. Mato hii. So mato. Mato hii. Haya Mkosho. Hii kichwa tulisema ni ma, si ndio? Alafu hapa
Mato.
Alafu hapa
Mato hii.
Haya, mato hii. Okay, ma. Mato. Sasa ukifanya kitu sicho unakuja hapa mbele, si ndio?
Nitaangalia. Twende kazi.
Wewe niangalie, si ndio?
Yes.
So are you ready? Mfanye hivi kidogo. Sawa. Niletee waziri pale tafadhali.
Yupi? Huyo. Just come sir. Yes.
Mwambie akuje tu pole. So, ma.
Just be up here. Yes.
Kuna
Who? This one.
Huyu hapa.
Okay.
Haujamuona? Haujamuona? So matoi. Sasa. Tukuje tu hapa juu.
Wakuje juu, si ndio? Aya, selector number 1, twende kazi. We're going to do the chicken dance. Are you ready? Aya.
DJ. Hold it.
Wacha tuwafundishe, si ndio? Very easy. Shikilia DJ.
So, tunafanya 1 2 3. 1 2 3. 1 2 3.
And then you clap. Sasa.
1 2 3. 1 2 3. 1 2 3. 1 2 3. Sasa, are you ready? Okay, right. DJ, when you're ready, we are ready.
From the top, twende kazi.
Okay.
From the top, DJ. Over to you.
Okay. From the top, selector. Tuanzishe mwanzo. It's okay.
Aya, okay. Concentration. Are you ready? Let's go.
Hapo.